In the first video of this series, I covered the Fibonacci levels I use, how I constitute where I'm going to draw a swing from, and that we look for a confluence of levels, and you can even use basic price structure as a part of the confluence. If you missed that first video, up here in the left hand corner there's a link. You can just click on that and that will take you over to the other video. So in this video I want to take it up a notch, and this is going to show you how to get into a trade. Just because we have a confluence, it doesn't necessarily mean we're going to just jump into a trade there. That's just foolish. Price has shown and the market has shown that we're in a location where we're going to consider a trade. Does not mean we're just going to jump into a trade. You can if you'd like, and that's how people lose. Okay, and then with Fibonacci, you will get levels all over the place. And people will say, that's always the knock against Fibonacci, is, well, I can draw levels all over the chart and price will react or not. And that's correct. But we're not looking for singular levels. We need a confluence of levels. And that's how we decide what we're going to do. So this is the New Zealand dollar daily chart. It's a Forex chart, my favorite market to swing trade and position trade. Anyways, let's get started here. Here's a swing high to this swing low. You see where price comes in, 61.878.6 level. So let's just get rid of the levels that price has blown through. Now, you know, price won't always respect the levels. It may never respect a level. But you can see, and it gets held up in here. So now we need something else. Well, what else do we have here? If you look, we have a swing. The market comes down here, puts in a low, swings back up, comes through here, right? Fibonacci retracement, we can still use that. There are internal retracements, external retracements. The external retracements are the ones that are above the 100 level. So all I would do here is I would draw from here. No, I won't. I would draw from here to here. And I'll get rid of the levels that we don't need for this, because I'm not looking at all the levels. I'm only looking at the levels that have are the external ones, which is the 1.272.61.8. So let's get rid of the ones that we're not going to use for this. Give me 1 second here. Okay. So now we see we have some confluences setting up in this level up here. But I like to see a little bit more confluence so I can, consider a trade. I'm not just going to just jump in here. So we do have a confluence of levels up in this area. So what else do we have here? Well, if you go back to the first video, you'll see here Fibonacci extensions. We have a low, high, low, and you'll see what we have up here with the 161.8 level up here. Okay, so there is a confluence of at least 3 price zones, and let's just we can also use, you can't see in the chart here, there's a swing level right over here. And you can see that also comes in at this level up here. Okay. So let's get rid of all this stuff. So now we know, just by looking at here, what we just showed, that the level that we'd be looking at taking a trade in is actually the exact area where price has gone to. And that's what we want to see, which is just up in this area right here. So that would give us in advance an area that we're looking to take action at. Now we know that price already reacted here because we're looking at this chart like this. So we have to find a way to trigger ourselves in the trade. And there's so many different ways that you can do that. I'm going to highlight one of my favorites is just the stochastics, and I'm going to have to drag it up, which is going to scrunch up this. But just remember, this is the area here that we're looking to take a trade at. And you'll see when price comes up to this area, which is the 859.6 level, you can see that let's see if you can still see this. There we go. You can see that the price has come up here, and this has pretty much stayed with the fast line above the slow line. Okay. So what I would like to see is a cross down, which we get right there where the red line crosses through. Let me just draw a line here so we can see the time level on that, which is here. Okay. So that's where we had the across. So the area we're interested in taking a trade is up in here. Right? We found that through Fibonacci levels. And then we would just wait. We would wait until price got up in that level. And then we would look to take a trade. Now that's with an indicator. This is where the cross would come, right through here. And you would decide how you're going to take a trade on this. So if it was this candle here, it's quite simple. You can just take a break of this candle, this green candle here, and if price doesn't trigger in, see the red candle forms, you just move it up to below this candle, usually a pip or two below. This is the Forex, obviously I'm talking pips, and your stop would just go up in here, up through here, or up here, whatever you decide. Okay, it's pretty objective. I stopped the recording so we didn't drag on here. Another method that some traders will use is a moving average cross. Now, moving average crossovers is not something I personally trade, but it is an option for you to look at in context of the setup. Okay, don't just take moving average crosses as cross anywhere on the chart. That's just foolish. So we had price come up in this level here, which we had shown with Fibonacci levels. And you would have seen this in advance. Okay, these swings are already in place. And if you go back through the first video, you'll see that these prices, these levels that I drew from, they're pretty objective of where I'm drawing from. I'm not just picking spots. Okay, and I did not go through this chart before to find the levels. I just brought up the chart, zoomed over to where there was retracement, and hit play, record pretty much. So on this one here, we have a moving average crossover. It doesn't matter what you use. This is this 918 EMAs. So many different ones you can use. Obviously, shorter will get you in faster. The cross will happen quicker. So all you would do on something like this, you see where the blue line has crossed down over this line here. I'm colorblind, so I'm not exactly sure what color that is. Purple? Anyhow, see the cross down? As soon as it crosses down, you would play the break of one of the candles. For me, that just takes me too far away. I would much prefer either just trading the break of the break of a candle, or wait until price breaks through a swing level. So in that case, we would be having where the Fibonacci level comes up in here. Once price reaches that area, let me just grab a proper price level. There we go. We were doing it where you can just, price will come up. I think it was this area right here. Short here, right? Or you see this swing level here. Wait till price breaks through there. Okay, whichever one you decide, it doesn't, whatever suits you better, whatever makes sense to you. You can also gear down to a smaller time frame, such as a 4-hour chart. However, it's not something I'm going to cover in this video. I want to keep this video short. We're going to keep on doing these videos. So I hope you picked up here. The whole point here was finding an objective trigger into the trade. Okay, the most objectivity you want is where you're drawing from. Okay, getting into the trade, you want it to be as objective as possible. Once you have that, trading becomes a lot simpler. Trading's never easy. Just if you can make it simple, by finding objective measures, you'll probably do a whole lot better. And while there could have been other levels I could have drawn through here, these are the ones that highlighted to me quickly. And I don't need like 10 areas of confluence or 10 things making up the confluence. 3 is enough. And when you have price, which I can now scroll over, which was right here, was also in this level here with the Fibonacci, it's a no-brainer. Okay, next couple of videos we're going to cover a few other things such as targets and how to manage your trade. But let's cut this video here. Thanks for watching. We'll see you next week.